Hello, everyone. Welcome, welcome. We'll get started shortly. Welcome, everyone. Welcome, everyone. Hey, Tyler, welcome.
Hi, Dave. How are you?
Good, good. We'll get started shortly. Hey, Ranjit, welcome, Ranjit. Welcome, Ranjit.
Yeah,
We'll get
hi.
started shortly. Hello.
Is this the same link for every day? Or it's a different link?
Guys, we'll get started shortly. Hey, Kawisi, welcome. Guys, we'll get started shortly. Hey, Michael, welcome. All right, welcome everyone. As you guys know, this is our beginners class. All right, so for beginning traders. All right, but whether you've been trading few weeks, few months, haven't traded at all. All right, or even if you've been trading for several years and still trying to figure this out, this class is for you. So welcome everyone. Welcome, welcome. All right. I'm going to, 1 second here. The first thing we always talk about is this book here, which we highly recommend. All right, for traders. By the way, welcome Tylak, welcome Arthur, Michael, Randy. Kawisi, welcome, guys. Let's see here. So again, this is the beginners class, our beginners class. You guys should see my screen here, trading in the zone. Do you guys see that? Let me know, please.
Trading in the zone, also known as trading in the matrix.
Yeah, we'll go with that also. We'll go with that. Arthur, we'll go with that. All right. So there are 3 books we highly recommend. All right. Trading in the Zone, all right, by Mark Douglas. for new traders, especially if you guys haven't read this book, it's a great book. Goes into your mindset, the mindset we need as traders. All right. Some of the disciplines we need as to implement as traders, especially new traders. Okay, so trading in the zone, master the markets with confidence, discipline, and a winning attitude. All right. So when we do a one-on-one coaching, we give this book to our traders, okay, free of charge. All right. It's that important. And you can also find this book here on the Audible. All right. Also the audio book on YouTube. All right. It's free on YouTube, so you can go on and listen to it. All right. And I've been doing this for a long time, over 25 years. All right. I've been in trading. We started the company, Monster Trading Systems, in 2010. So a long time. And I still reference this book. All right. From time to time. All right. So Trading in the Zone by Mark Douglas. That's a must. All right. The next one that I highly recommend is this one here. Let me share my screen. Is a Trend Following, right? Trend Following by Michael Koval. You guys should see it here. If not, let me know. All right. This book actually changed my trading career. That got me on the right track. All right. Definitely got me on the right track years ago. All right. Trend Following, how to make a fortune in bull, bear, and black swan markets. All right. By Michael Koval. Highly, highly recommend this book. All right. Michael profiled traders that think a bit differently from what we know as Wall Street, right? Or the buy and hold crowd. All right. These traders are trend followers. Couple of things that they do that's unique, right? In as far as their approach to trading is that they have an entry, a very defined entry and exit. And we'll talk about that this evening. All right. So before they enter the trade, they have a very defined, very specific entry and exit. All right. As far as getting in and out of their trades. The other thing that trend followers do that's very particular to them is they use trading systems, much like the trading systems we use. Okay, so they don't rely on theory, all right, or manual trading, all right. There is some discretionary in their trading, but they use systems, all right. A lot of them use TradeStation too, okay, but the key is they use automated trading systems to help manage their trades. Okay. Hey Mary, welcome. There's several. I don't know if you guys have ever heard of the Turtle Traders, but there are two very famous traders, trend following traders. Ed Seykota is one of them. All right, Ed Seykota, and oh, what's the other one? I can't believe I'm. But I'll if it comes up, I'll remember. All right, but very good read, very good read. All right, we give this book to our traders that get our trading systems. Okay, so Tylac, you have this, and then the last one, Mary, you've got that also. All right, and then the last one is Trend Following Mindset. This is a relatively new one. I'm going to share my screen here. All right, I'm going to share my screen here. So by Michael Koval also. All right, and that's Trend Following Mindset. Okay, Trend Following Mindset. All right. All right. So now, Tylak, you've had these books. What do you think about these books?
That's really good. The first one, I really like it. That's the other one is long. This one I don't have. This is the one that I don't have, right? This is the third one.
Oh,
I
you don't
the
have
first
this
two.
one?
No,
Tylak?
no. I have the first two.
Okay.
And the second one is a long one. The first one it's excellent. And I bought the audio book, and then I found out later through you can get it free on YouTube. But I bought the audio book, and I would listen to it during my drives. It's fantastic. It's really good. It kind of sets you straight. Just to try, and basically the gist of it is, don't let your emotions get involved. If you get bit by a dog, that doesn't mean you should be afraid of dogs for the rest of your life. And he kind of uses one of those examples in there. But yeah, no, in short to your question, it's very good.
Yeah, that's right from the book too. Yeah, right from the book. I will that the trend following mindset is a new one. I thought I sent that out to you, Tylak. So I'll make sure I'll get that out to you. You'll have it by the end of the week. Okay.
All right, thank you.
Yeah, let me just make a note here.
David, of all these three books, I'm gonna read for sure, but can I just get your opinion on which one's like the best?
The best, okay, one second. Okay, the gentleman, I can't believe I forgot his name, John Henry. All right, so John Henry, he owns the Boston Red Sox. All right, and he started as a trend follower. He managed capital, right? A lot of the in trend following, the book Trend Following. All right. And I want to talk about these books this evening. John Henry, that's where he made most of his capital, right? Most of his money. And no, he managed a lot of the trend followers. In trend following, they manage capital and they use their trading systems. I'm going to go back here, and Atul, I will tie your question in. All right. I want to go back here, and this is why these books are critical. Okay. These books have certainly changed. We wouldn't be here if it wasn't for these books. I can tell you guys that. All right. So I really believe in good books. There's a lot of information out there, right? A lot of books out there. But this concept is by far the best, and I've come across a lot of information, so John Henry is profiled in here, John Henry, and several other great traders that you guys probably never heard of, okay, because they're not popular. All right, they're not like the Warren Buffetts of the world. All right. The reason that they're not very popular is because it's not that what they do is a secret, right? It's not a secret, but they do things differently than the mainstream, right? So they do things very, very, very differently. All right. Most of these traders, and we don't manage capital, right? We provide basically the same type of similar systems to what they use, right? They don't sell systems like we do. They build their systems, and these trend followers will manage capital. So they have clients, they manage capital, and they use their systems to manage their trades, okay? But a lot, and we have several of these trend followers in Florida. All right, Boca Raton, Stewart area. Ed Seykota is perhaps the most famous trend follower. He started building trading systems, and this is important to know. I think Ed Seykota started building the first trading systems with using algorithms back in the early 70s. Okay, late 60s, early 70s. The reason why, one second here, I'm trying to find it's called. There's a good video. I used to have traders listen to it. It's called the Whipsaw song. Tyler, did I ever share that with you? The Whipsaw song?
Yeah, that was our first one-on-one together. You did.
Yeah, the Whipsaw song. All right. You guys might want to just write this down, the Whipsaw song. All right, by Ed Sakota. You can go on YouTube and play it, the Whipsaw song. Chris, hey Chris, did we ever play the Whipsaw song?
No,
No? Okay.
not that I recall. No.
Oh, okay. All right, so let's see here. I'm going to share my screen here. So here's Ed. Here's Ed Sakota. You guys should see here. So that's him. He's older now, right? He's older now. And but he started building the first trading systems, okay, years ago. So what this trend followers, let's see here. What's really cool about what Michael did, Michael Covel, right? Michael Covel, the author of this book. And if you guys want to do further research, right? He has a podcast, right? A really good podcast, and he interviews legendary traders. All right. So although the book might be dated a bit, right? You can always get current information from Michael. All right. I boast about Michael because he did something different. All right. Michael noticed that if you guys look here, right, how to make a fortune in bull, bear, and black swan markets. And what Michael noticed is that, but prior to that, he was at FSU, right? He went to FSU and he met, I have 3 kids at FSU. So we just came back from the Clemson FSU game. We lost, but I've got 3 kids there. One just graduated. I've got 2 more there at FSU. All right. But Michael went to FSU and he met a professor there. All right. A professor at FSU, retired Wall Street professor. And that started his journey, interest into trading. All right. And what Michael noticed was that, markets are crashing, right? Markets are crashing. Capital didn't just disappear, right? Capital just didn't vanish. It must have gone somewhere. All right. So what he went on a journey, right, to figure out where did that money go, right? If folks are losing money, people are losing money, it just didn't just disappear. It must have gone somewhere. And he found that there were a group of traders that were usually on the other side of the trade. All right. So markets are crashing, right? He found that there were a group of traders that were another 100% of the time on the other side of the trade, but a large percent of the time they were on the other side of the trade making money. All right, they were on the other side of the trade making money. So he went on, he did some research, right? Found who those individuals were on other side of the trade. All right. And he noticed that those individuals, what was consistent among all of them, and he interviewed them. They're in the book, right? As a trader, this is a must. I think it's a must. All right. And he found that those traders, right, had very specific buy and sell entries. All right. And again, they used trading systems. All right. So they use trading systems. All right. So this book here, I found this book, right? I've traded for a firm, a day trading firm. I've lost money. I've made money, years of struggle. And just when I was about to almost give up, and this is all on our website in my bio. I found this book. I was traveling, found this book in an airport bookstore. Is where I found this book. You never know when you're gonna, find your aha moment. And this was the one that did it for me. So when I read through this book, and it took a while to really change my thought process, because I was day trading, right? I was day trading, all right? Never followed the big trends, right? It took a long time to even trade on an hourly or 4-hour time frame, all right? So found this book, started reading through it, scratched everything I was doing, right? Scratched absolutely everything. All right. Went cold turkey, cut everything, and started from I would say within a month of reading this book, I tried to change everything. All right. So much so that I started testing and building trading systems similar to what these traders use. Okay. And no, that took years. That took about, after finding this book, about 5 years of hard research and testing, back testing. Okay. Didn't trade for about 3 years. Didn't take another trade for about three years, almost 4 years. All right. Because I tell traders, and I had a conversation with a trader that's doing a one-on-one coaching. And he asked me, he's still trying to figure things out, and he wanted to know if he should continue to trade. And I told him no, right? Get the right information and then trade. Once you have the right information, you have your process in place. Okay, sometimes we have to do that. All right. Sometimes we have to stop trading. All right. Work things out and then start trading again. All right. And that was for me, but that was a long time. I really went to work. All right. And you guys don't know my story. I don't talk about this a lot. But after I did a lot of testing and I figured this thing out, and I give all the credit to this book right here. All right. I started building trading systems, testing things out. I had some friends that were traders, and they worked, and they're nothing like they are now. I mean, they were just raw systems back then. Now they're all colorful, and you guys are lucky and fortunate, those of you who use the system now. But back then it was just a raw buy and sell. I still have some of the old systems, but I had traders come into my house, right, day and night, right? I had some hedge fund guys come into the house to look at the systems. I've met with very big hedge fund guys that have studied the systems, but never really wanted to go that route. but the company started by traders, individuals, just like you guys, coming to the house. Initially I started giving the systems away, and then there was such a demand that the company developed, and my wife, she got tired of everyone coming to the house, so we had to get a small office. But this is it here. This is it here. And I know we have several traders that from this process, from this mindset, have moved on to do really, really well. All right. We have a few traders from this education that's actually working for firms now. Okay. So I really believe in this concept, but this book here, Trend Following, right? Trend Following by Michael Koval. Okay, so Atul, you mentioned, right, if the best place to start, I would say trading in the zone, right? Trading in the zone, this one here. So trading in the zone. However, right here, let's go here. Right here. So trading is in the zone, right? For every new trader, I think this is a must. Okay. Okay, so this is a must. But if you really want to get into the mechanics of trading, so this gets into the mindset, right? This gets into the mindset of trading, all right, and the psychological or the psychology of trading, all right. But trading in the zone, trading trend following gets into the application, the actual application, right? Ty, like you said, you've gotten into trend following. Or you
Yeah,
haven't?
that's it. Yeah, I didn't know much about trend following until I started. One was listening and the other one was reading to the other one. But yeah, it's that's basically what we kind of do right now is the trend following.
Yeah, yeah, and more application, wouldn't you say?
Yeah, yeah, absolutely. The
Yeah.
books help you understand it. Well, this one helps you understand it. The other one is a mindset thing, but yeah, this helps you understand it.
Yeah. Thanks, Tyler. And good books. I believe in reading, right? I don't just read anything, but I think really good books can really get you on the right track. All right. And I wouldn't recommend there are lots of books out there, lots of trading books out there. This is a must, right? This is a must. Trading in the zone is really, really good. All right. But this one right here, the biggest concern that I have seen in all these years of doing this, working with traders, right? Working with traders, helping traders, coaching, right? Providing systems and solutions. It's always the entry and the exit. And obviously the psychology, the mindset, right? The emotions. But the biggest thing is the entries and the exit and staying with the trade. All right. And trend followers, they do a really good job. They stick with their system. Right. So things could be burning down, crashing, doesn't matter. They're gonna stick to their system. All right. And everything is rule-based. So it's rule-based, right? It's not based on what they want, all right, or what they think is what their system is telling them, right? And they go by their system. It's a different world now. It's a different world. Okay. I mean, the days where, you know, you've got specialists on the floor running orders, you know, that's all gone. They all use trading systems. They use, a lot of them use high frequency systems that are very, very fast. All right. So that's one thing we do that's very, very different. Yes, we provide the training. Yes, we provide the coaching and all of that. But behind the scenes, we have trading systems to help us, right? To help us manage things. Okay. All right. So we can take someone, new person, right? And we don't talk about the systems too much in the beginners class, but we can take a new person. Now, it's not perfect. There's no holy grail out there. All right. But when you have a process, a system that's telling you one thing, right? Hey, buy here, all right, or sell here, right? It's really hard to go against that. You've got to force yourself to kind of go against that. All right. And that's why these traders, these trend followers do really, 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 really well. That's why they make, and I'm not that you're going to make a fortune. That's not what it's about, right? Just give us an edge. All we want is an edge and a chance, an edge and a chance. All right. But when everything is blinking, sell, 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 sell by their systems, it forces them to sell. So while everyone else is still long, guess what? They're out or short. All right. So they're usually in before everyone gets in, and they're usually out before everyone gets out. Okay. So trend following. Very good book. Must have. All right. A must have. Trading in the Zone, a must have. All right. So any questions? Any questions on this? Any questions? Any questions? Arthur, does that answer your question as far as which book first?
Yeah. I mean, after listening to Trading in the Zone, it feels like it's kind of hard to beat because it feels like it's you know, just waking up from the matrix. But if trend following the trend is going to teach you more about the systems, I guess it's more on the technical side, and Trading in the Zone is more on the psychological side. So it's good to have both, and that's why they really complement each other, I guess. And
yeah,
definitely are going to be reading that. Thank you.
Yeah, very good. That's yeah, very good, very good, very good. I'm going to share my screen. So Michael was on the call last night, and Michael had been trading for a bit. And we were talking, we were looking at the chart or a screen, and I was saying that we don't have MACD on the screens, on the charts, right? We don't have MACD, stochastics, it's very simple. And the reason why it's very simple is because it's basically the same rules that trend followers use, okay? The less we have on our screen, the better, okay? Because we can follow price. Trend followers, they follow the price action, right? The price action. Nothing else matters. Nothing else matters. I'm going to go through this, and then I want to show you guys that video on Ed Seykota. Okay, we'll end with that. All right. Let me make a note here so I don't forget. And that's the Whipsaw song. And you guys will get some appreciation for that. And that's by Ed. Okay, so every trading system, a really good trading system, all right, buys on a break of resistance. Okay. So here is resistance. So resistance and support. Okay. Every good trading system, trend following, right? Every good trader, right? No, they might have a different terminology for it. There's some new stuff out there, new phrases out there. All right. But it's all the same, right? Resistance. We got resistance here. And then we got support over here. All right. When we buy, right, and you guys know this, a lot of you guys know about this, but we want to keep going over it. We always want to buy when the price breaks resistance. That's our entry. So any good, really, really good trading system, right, that's worth its grain of salt, right, is going to give you a buy signal on a break of resistance. Okay, because that's where buyers are getting in. All right. There are a lot of systems out there and processes out there that will trade within here. That's no good. Okay, we need trends. We need a breakout, okay, from resistance, and we need a trend following. All right, we need a trend. So every buy entry will be on a break of resistance. All right. Every sell order, every sell that we do will be a break of support when the price breaks support. All right. There's no other entry and exit that works better than this. There isn't. That's it. All right. The best entry, right, to go long is when the buyer's price breaks resistance, right? Buyers are entering the market, we buy. This is not tradable. All right. If we want to go short, the price has to break support down in here and move high, lower. All right. If we bought here and the price breaks support, we have to get out, close the trade. Okay. So I always tell traders, we're always going to buy on a break of resistance, sell on a break of support. Okay. So buy on a break of resistance, sell on a break of support. Every good trader, I'm repeating this, every good trader does this. There's no other way to do it. The right way. This is the right way to do it. Buy on a break of resistance, sell on the break of support. Buy on the break of resistance because the buyers are in control. The buyers are buying. Sell on a break of support because the sellers are now in control. So when the sellers have control, if we're long, we've got to get out, close the trade, get out, exit, we're done. Okay, so support and resistance, the keys to your success. All right, so that's our entry and our exit. All right, our entry and our exit. Now, see here. Any questions on this? Any questions on this? Okay, the next one is the 4 market phases. I'm going to spend a little time on this. All right. Now, if those of you who do not have this, Michael, I don't think you have this, so you might want to take a picture of this, right? This screen here. All right, if you don't have it. All right, the 4 market phases that every trader must know. All right, the 4 market phases that every trader must know. Okay, it's going to start with the accumulation phase down here. Okay, 4 market phases that right here, every trader must know. Starts with accumulation. All right. Markup, distribution, all right, markdown, all right, and then starts all over again with the accumulation phase. There's only 4. Okay, there's only 4. All right. The accumulation phase will be at the very bottom, right? Usually at the very bottom, left, middle, or right. Okay. And the goal is, right, price fell, and we want, just think of accumulation. That's where the big institutions, big money, right, big hedge funds are buying, building positions before they move the price higher. All right, so they're collecting, right, building, buying blocks. We call it blocks of shares, right? And what they're doing, they're hiding their trades. So rather than taking a big trade and push the price higher, they'll take small blocks of position, build their position in here, right? So they might push the price down a bit here to get a lower price here. So let's say it's $100 here. All right, and it's $50 here. Okay, so they're building, that's why it's called the accumulation phase. They're gathering, they're building, accumulating shares, right, before they push the price higher. That's why, right, we have to wait for the price to break resistance. When the price breaks resistance, what that tells us is that they're ready. As retail traders, we can't move the price, right? We don't have enough volume, right, to move the price, right? So when they're ready to move the price, when they're done accumulating, building shares, blocks of shares, right? When they're done and they're ready to move the price higher to get into the markup phase, that's our trend following, all right? We'll know that when the price breaks resistance. That's why this is important. The break of resistance will tell us that, right, they're ready. The big players are ready to move the price higher. If we buy into this area in here, right, we will incur a lot of loss, right? Because guess what? They're not ready yet. It could still go lower. They could push that price lower, break support to get an even lower price. All right. So we need that price to break resistance. Once it breaks resistance, we get a buy signal right here. All right. Every good system, every good trading system will give you a buy signal on a break of resistance. If you do not get a buy signal on a break of resistance, right, you need to analyze that system, that process. It could be a manual system, a manual process, or a systematic approach, right? A rule-based system like we do. All right. Because imagine the markets are breaking resistance and we're not getting in. There's no trigger to get us into that markup phase. How can we get into the trend if there's no trigger to get us in the trend? Right? Think of it. It's right. So the trigger is resistance. If we're going long, right, an upward trend, a markup phase, right? So we have to have an entry there. All right. Now, if it fails, all right. So if it fails, goes up like this and come down, our exit would be support down in here. Okay. So the 3 phases: accumulation, markup. That's our trend. All right. Within the trend, price doesn't go up steadily forever. It has to stop, slow down, consolidate again. All right. Or accumulate again. We call that the reaccumulation phase. All right. If new buyers come in, break that resistance. Okay. That's the reaccumulation phase. That's new buyers coming in to push the price lower, right? I mean, higher. So that's all of that is the markup phase. So just think green markup phase. All right. When the trend is over, right? When the price doesn't move any higher, all right, any higher, can't go up forever, break support, breaks support here. Now we have sellers coming in. We have to get out. We can't stay in the trade when sellers are coming in. So we have to get out. All right. So here was our entry. And now here is our exit. Okay. Once the sellers come in, that's the markdown phase. Markdown phase. Price is moving lower. If it breaks new support levels, that's redistribution. New sellers are entering the market. And then it starts all over again. All over again. There's only 4 phases. All right. Starts all over again. You guys will see this. We talk about this, but you will, the more we talk about it, the more you pay attention to it, the more you'll recognize it. And this will happen on every time frame. So whether it's a 5-minute, 30-minute, 20-minute, a daily, weekly, monthly chart, you will have these 4 phases, all right, on every single chart. You might be in a different area, right? You might be on your chart, it might be in the markdown phase, all right, might be in the markup, might be in the distribution phase. Okay, so it's important to notice this right here is huge. These 4 market phases right here is very, very important. All right, you have a question, Arthur?
Oh, yes, please. For this, what time frame would you say is most useful for a day or for a trader, I guess?
What time frame for? Well, this will work on any time frame. These 4 phases will be on any time frame. You'll find this on every time frame. Your job is to identify, right? Your job is to identify where your current price action is within the 4 market phases. Does that make sense?
Sorry, the price action?
Yeah. Okay.
Okay.
So our job when we trade, all right, is to figure out where we are in the 4 market phases. All right, so here is a price chart right here. All right, here's a price chart right here. So let's think about the 4 market phases. Okay, so here's a 60-minute time frame. 60-minute. Here's our trading window right here. All right. Now, the cool thing about this is that once we do this, it makes our job very easy. Well, easier, a lot easier. All right. I had one of our one-on-one coaching students. I don't know if you guys, some of you saw that. Her homework was to draw in. Her homework was to Maria, draw in, go home, right? And I will do this with traders, right? If they're not really getting it, right? And her job was to find support and resistance on a regular chart, right? Find support and resistance, draw in her buy and sell signals through and all through, right? From the accumulation to the markdown. And she did just a beautiful job. She did an amazing job. So much so I sent it out to everyone. All right. Did anyone see that? Did anyone see that chart from Maria? Did anyone see that chart? Tyler, I think you were traveling. Chris, did you see that chart from Maria? Mary, did you see that chart? You saw it, Chris?
Yes, yeah, I did. It was really good.
Yeah, it was really good.
Yeah.
Really good chart.
But we got to pick up your medicine. It's ready.
Yeah, it was really good. Really good chart. All right. So look here for a second. So I'm just going to ask you guys here. Let's see. Here, right here. What phase is this here? What phase is this right here?
Distribution.
Accumulation.
What phase is this? Look at your chart. What phase is this?
Accumulation.
Accumulation. Very good, Michael. Accumulation. So this is where we get trapped as traders. We try to trade this because we don't understand what's happening, right? So they're building position right here, right? There's a battle between buyers and sellers, right? You're gonna see white candles, green candles, red candles, right? There's no trend. That's the accumulation phase, and it's gonna be at the bottom usually, right? When the price breaks resistance right here, so this is why trend followers use trading systems, right? They're not guessing, right? So here is our algorithms, our buy signal is to buy right here. That's the markup phase, all right? Now, here is new support resistance. It broke resistance here. That's the accumulation phase, but guess what? It failed. It failed right here. So this now becomes the distribution phase, right? If it breaks resistance, keeps going, that's reaccumulation. But guess what? It broke support, right? We had a sell signal right here. To get out, it broke support right here. Okay, so here was our buy and here was our sell. Blue dotted line means we made money. We bought here and we sold here. We'll never get the top, right? The very top, and we'll never get the very bottom. The very bottom, that's seller's territory. They could push that price lower, all right? Right, so we have to wait for the price to break support, wait for the price to break resistance, to enter, to exit. Here is sellers coming in. These are the sellers. This is the markdown phase. This is the markdown phase here. Okay, so accumulation, markup. We didn't have any reaccumulation, right? Distribution, right? Markdown, redistribution. You see here, these purple lines here. I know it's hard to see, but you guys get the idea. These every time these sellers break red candle, these are the sellers, break this support, that's redistribution. New sellers are entering into market to push this price lower. Okay, and all of this is the markdown phase. Okay, the markdown phase. Now we get into accumulation again. We back down to the bottom of the chart here. All right, here is accumulation, right? Price broke resistance. So we had buyers come in, it failed, right? So we bought here, price broke support right here, we got out. And Michael, you'd ask about stop losses, right? Our stop, we don't do any stop losses. Our exits, entries and exits, it's right at support and resistance. That's it. That's it. You're going to get your tightest entries and exits right at support and resistance. Okay, so this one failed. And we had another one here. Here is resistance. Here is support. This time, we're still in the accumulation phase. Just because it failed doesn't mean we're out, right? We're still going to test and wait for those buyers to come in. So here, price broke resistance right here, right? On this candle, green candles, buyers are coming in. Here's our trigger to enter the market, okay? And so this is now the markup phase, all right? That's reaccumulation, right? We have new buyers coming in, that's reaccumulation. So we would have bought here. If we wanted to add it in here, reaccumulation. And guess what? Here is resistance, here is support right here, all right? Right? Price broke support right here. Here is our buys. Here is where our entry. Here is where we entered. Now the current price is right here. So what phase is this now? And now this is the markup right here, right? Markup. What phase is this now? Current price is right here. Right here. What phase is this?
Distribution.
Okay, Arthur said distribution. Anyone else wants to give it a try?
It can be either accumulation or distribution.
Okay, so Ranjit said either accumulation or distribution. Anyone else? Want to give it a try? It's neither. All right, so we call this, it's still, just think of it as it's consolidating. If it breaks resistance, that's reaccumulation. So that's new buyers coming in. Okay. If it breaks support, now that's distribution. And now it's going to get into that markdown phase. Okay. So if it has to break, if it breaks resistance, new buyers coming in, just think new buyers coming in, breaks resistance. Okay. That's reaccumulation, new buyers coming in. If it breaks support, that becomes distribution. Okay. Reaccumulation, continuing the markup phase, continuing the trend. Okay. Break support. All right. Kind of like here, like it did here. Break support. Right. This now becomes distribution. All right. And now we enter in the markdown phase. Okay. Now, the cool thing about this is that we can look at a simple chart, right, and decide where we are. All right, in the 4 phases. Okay, so we know right here we're in the markdown phase. We should not be buying. The current price is right here. We're in the markdown phase. We should not be buying. All right. Here, we know, okay, we're in the markup phase. All right. We've passed the buy signal. We've broken, all right. We've broken resistance right here. Here is our accumulation. Here is the markdown. Okay. A lot of times as traders, we have no idea where we are. And that's part of the problem. Right. We look at a chart and we have no idea. Right. We have no idea. This is our roadmap. All right, so here's the buy signal right here. And we know, guess what? It's getting ready to break resistance here. That's reaccumulation. New buyers coming in, kind of like here. We know when new buyers come in, we get big, normally we'll get a big push higher, right? There's new buyers that missed out on this first opportunity right here. All right, so this is why this is important. And we can go to any time frame, any chart right here. Look at this one here. And just stay with me. Okay, here, there was a buy signal here. Here, sellers came in on the break of this support. Here's our exit. So we bought here, got out here. We didn't take this loss here. Okay. That's why this is important. Now, if I'm trading this way, guess what? I see support here. I see some resistance right here. All right. I might wait for this for accumulation down here. I know accumulation is going to happen at the bottom of my screen. If I get buyers, a big buyer to come in here, get a buy signal here, guess what? I'm looking to take that trade long. All right. And just wait for the selling to be done. All right. Any questions on this? Any questions
Sure.
on this?
Yeah. So this is for anything, right? So you could use this on an index as well.
Yes. Yes,
So,
Michael.
So do the indexes, I know it's just a general question, indexes follow equities or equities follow index?
Okay, so the equities will follow the index. Okay, so the index is always first. All right. So here the index is here. And we, as a matter of fact, we're watching, we've moved the indexes. So the Dow, the S&P, we've moved it to a 4-hour time frame. All right. We've moved it from a weekly time frame to a 4-hour time frame because we noticed buying coming in. And that's the cool thing about this, right? So look here. So we've had buying come in on last week. We had buying come in. And then we had continued buying so far this week. So we're starting to see, it's early, it's really early, but we're starting to see buyers come in on the 240. So we can do this on a 240 too, any time frame. Here's 240. Okay. So we'll probably call a rotation in the equity markets tomorrow, because look here, look what we have, right? Markdown phase. This on the Dow, markdown phase. Look at that. See that? Redistribution, redistribution, right? All the support and resistance line. And guess what? Here we are. Here is our accumulation on the 240, accumulation phase right here. And guess what? We got buyers broke resistance right here. Here is our buy signal here, this arrow right here.
So that's the question. So you see this and you see a breakout, and then so you could at that point go find the biggest in the index and buy that Procter and Gamble or something, right? Biggest individual equity.
Yes. So
Okay.
what we are, and this is a good example, right? So you guys see that the four market phases, right? We're waiting for the sellers to be done. All right. Now we've reduced the time frame, right, to a 240. And if it keeps going up, we might then move to a daily time frame. But a lot has to happen to move to a daily. But if you look here, we have the Dow is ready with a buy signal. We also have the the S&P. Look here, the S&P is still working its way right here. See that? It's no buy signal yet, hasn't broken resistance. If it breaks this area right here, we'll get a buy signal. So we'll wait on confirmation, right? We'll wait for more confirmation. But we have two. We have two. We have the Dow and then we have the Russell. Okay, the Russell is right here and we have a buy signal on the Russell. Okay, look here. All right, on the 240. So here is resistance right here. Let me draw it out. All right, right here. And here is buy signal here. This one failed. All right, this one failed, but here we are again, right here. Okay, looking to break through. We have a buy signal. Buyers are coming in. Still early, but we'll keep an eye on it. And what we would like to see are additional buy signals. All right, buyers are coming in on a break of resistance on the S&P. Right, here's the S&P, nothing yet on the S&P, and then the NASDAQ. Okay, and once we get all four buy signals on the 240, then we'll go to the sector. Okay, and the VIX, we want the VIX to come down. Okay, so the VIX needs to get, this is really cool, right? When we understand what's going on. And Tylac has all of this. Tylac has all of this. So he can do a lot of what we're doing here at home. And so see here, this white, so we are still in on the VIX. We want the VIX to come down to push the market up. So the VIX is coming down. If it breaks this support here, right, it will know. We don't have the buy and sell signals on here because we just look at the very price. But I could do this here. I'm going to bring in here just so that you guys can see. Let's see, add strategy here. And we're going to do buy. just to see. Okay, so here's our buy signal right here. I know it's hard to see on a break of resistance. To get excited about the market, we would need to see, like I said, Dow, S&P, NASDAQ, right, give buy signals, but then we'd also want to see a sell signal, some red candles come in on the VIX, all right? And that as volatility comes down, the market will move higher. So then, Michael, what we would do is from there, we would go to our sectors. So here are all our sectors, okay? And we would
Okay.
like to see the sectors before we look at any stocks. We would like to see the sectors start to now give buy signals. Okay, so
Okay.
we'll move it. We have it now on a daily time frame. All right, so we'll move it to so that it matches. All right, so we'll move it to a 240. Now 240. And this is what trend followers do. This is what they do, guys. This is what they do. They don't just randomly buy. All right, this is the type of work, but they use their systems just like I'm doing here. They use their systems, no fundamentals. Doesn't matter. Fundamentals, it's in the, we assume it's in the price.
Okay.
All right, let's see here. So let's see if we have any. So here, let's go here. So this is what happened for the day here. So we're going to put it on a 240. So nothing here. All right, let's see here. All right, nothing breaking out here yet. Let's open this up. All right, so this here, so we've got home construction, that's an index here. So it's still, look here, markdown phase, it's still working through that accumulation phase. Look here. That's why that 4 market phase is important. Okay, here is resistance. Here is support here. And so, and rather than watching this, right, we can just wait for the buy signal. So it's still working out, right? Still working things out here. They're not ready to push it up yet. This is on the 4-hour time frame. Industrial, look at industrial, right? Industrial is starting to break out, right, of that accumulation phase, a high accumulation. Let's see if we find a better one here. Still working out, right? All right, still working out. Financials. Hold on 1 second here. You guys see that?
Yeah.
Second here. Okay. Okay, so we got more data here. So look at financials. Look at that. All right, so we have a buy signal right here. All right, so financials is one we would keep an eye on. All right, let's take a look at materials. Materials still working out. So utilities, look at this, nice markdown phase, right? All that selling. So we're not buying up in here. We get a cheaper price. This is where the big institutions love to buy, at this bottom of that markdown phase, going through that accumulation phase. All right, and now they're gonna move that price higher. They like that accumulation phases because that's where they're getting a better price. They're getting a discount. Okay, so we want to be thinking the same way, right? We want a discount. All right, so let's keep going. Nothing here. And it's still early now. It's still early. Energy has been moving higher. If you guys look here. All right. So energy right here. Energy is up. Energy right here. Energy is up right here. All the rest are down. Gold is a bit up. Okay. Let's see here. Real estate. Let's see, not getting close. All right. Biotech, getting close, needs to break resistance. Okay. Silver, gold, tech. Buyers are coming in, still early, but we can start, getting ready. Healthcare, buy signal. All right. So it's starting to break out. And then go down here. Okay. And from there, Michael, right? Once we find the sector, the best sector that's getting through, that's going through that markup phase, that has a buy signal and getting through that markup phase. All right. Then we'll start looking for the stocks.
Okay.
Okay. And
Yeah,
then what we
makes
do is we track right here, we track 22,000 stocks every day. All right. Every day we track 22,000 stocks. Okay. Tylac has this. Mary has this. All right. And what will happen is we'll notice here 22,000 stocks automatically. So we're using the trading system to do the work. And we track very high volume. So we track, if you look here, MMAT, that's 128 million shares being traded. And we track that on 3 months volume. So the institutions, they don't just buy, right? They build, right? Remember I said during that accumulation phase, they're building blocks, they're buying blocks of shares, right? And they don't just buy it in one day. So they'll buy it for weeks and months at a time. So we track that volume for 3 months. So we want real volume coming in, right? Real buying by the institutions. And if you look here, here is where they're starting to buy. All right. So it fell, right, all through that markdown phase, and they're starting to buy here. But they're starting to buy tech. But if you look here, and it's still very early, if you notice here, and that's everyone, you see we have more healthcare stocks, more biotech stocks than any other right here. So what that will tell us is they're looking to perhaps start buying healthcare stocks. So the next rotation might be healthcare. But again, still very early, still very early. We'll watch it on the 240, but the daily for equities, we'll get real confirmation when we get new rotations, right? Buy signals on the daily time frame, getting into that markup phase. Okay, so we go one step at a time. The sector, right? The sector, I'm sorry, the indexes, then the sector. All right, we tie in the VIX for volatility, and then the stock lasts. Okay, but the stock, everything, if you notice, everything from the sector, the index, the VIX, right, and the stock has to follow the 4 market phases. All right, on all the different time frames, right? So here, markdown phase, this is perfect. Look at this, markdown phase. Buyers are coming in here to now take that price down here from 232, right, to now move it higher again. This is where they buy, right, and the price breaks through that accumulation phase. Okay, going to be at the bottom of your chart. Now at the top, they don't want to get a high price. They want to get cheap, low price. Okay, that's the accumulation phase. All right.
So this list on the left keeps changing every day, right?
Yes, it changes every day. Tylac, you've been watching yours, your heat seeker. Mary, have you been watching yours, Mary?
I'm not yet in stock, so
You know, and you notice what Mary said, she's not yet in stocks, so we should not be trading stocks. But yes, it runs every day. Now I promised I wanted to show you guys this. Ed, the video on Ed Seykota. Okay, legendary, and you guys do some research on Ed, legendary trader. legendary trend following trader. One of the reasons that we're able to do this today, you know, and have trading systems is because of Ed. So I'm going to open up, hold on one second here. And this is called the Whipsaw Song, the Whipsaw Song. Okay, it's not long. All right, 1 second here. Let me cue it up. Let me share it. And Ed is profiled in the book. All right, trend following. Okay. You guys should be able to see my screen. Let me know if you can hear it, okay? I'm gonna play it. If not, let me know. Can you guys hear it?
Just barely.
Barely. Let's see here. All right.
Reveal the inner workings of my trend trading system. I hereby take great pleasure in presenting its essential elements for your
No,
education.
but I could look it up.
Joining me today,
You guys can hear it?
No, not really. I can't, but maybe the others.
we gather to lay benefit
No, not very well either.
Not very well.
I'll look this up too.
currently clinic covering
Okay, hold on. Yeah, just look it up, guys. Just look it
Yeah.
up, okay?
Yeah.
And
Yeah,
play
it's
it
easy
when
enough.
you guys get a chance, okay? The Whipsaw Song. All right.
Okay.
All right. Any questions? Any questions? Okay. The takeaway here is this. Don't try to do this on your own. All right. The takeaway here is that don't try to do this on your own. All right. The best traders, the best trend followers, the reason they win at this is because they have help. All right. All right. Use a trading system. And it doesn't have to be our trading system. All right. But use a trading system, use tools. Traders nowadays, the really good traders, the best of the best, they do not trade manually. Most retail traders, 90%, a large percentage of retail traders try to do this manually. They do this manually. So as new traders, right? If you guys can get into this, into trading, and you get some help, you use tools, right? Trading systems to assist you, all right? You will have a better chance, all right? Mary has just started 2 weeks ago. In the past, if we had a new trader like Mary who've never traded before and put her into the Forex market, which is a very volatile market, all right? Boy, within a week, 2 weeks, 3 weeks, you blow up accounts. I've done it many times. Blow up accounts after accounts after accounts. These tools, trading systems that these trend followers use, right? As long as they are buying on a break of resistance, selling on a break of support, they will help you. Okay? They will help you, right? The really good trading systems, they're going to cost you. It's not going to be $100. All right. You're going to spend a bit of money. All right. but it's well worth it. As a new trader coming in, right? You don't want to spend years like most of us have done. Michael, I know you've spent years, right? Ty, like you spent a bit of years. I've spent a lot of years trying to figure this thing out. All right. So these trading systems, trend following, right? The 4 market phases, support and resistance, that's going to reduce our learning curve and give us more success opportunities. Okay, so I wanted to go through that this evening. I haven't done a class like that with, going over, Ed Seykota and John Henry, and those are my mentors. Those are my mentors, right? They are my mentors. All right. All right, guys. Thanks for coming. Thanks for sharing. All right. And I will see you guys tomorrow. We'll do an equities class tomorrow. And hopefully we'll get buy signals on the other 2 indexes. And we're starting to see more stocks come in. We're starting to see more stocks come in, right? Look at Bullmaster, right? We haven't seen this in Bullmaster for some time now. All right. So hopefully markets pick up and we can get trading stocks again. All right. Thanks, guys. Take care. See you tomorrow. Take care. Bye-bye.
Thanks so much, David. Take
Welcome.
care, everyone.
Thanks, guys.
Bye-bye. Thank you, David.